Okay, let's unpack this. Today, we're diving deep into ASML. Now, this is a company that, well, it truly operates at the absolute forefront of semiconductor manufacturing. Think of them as the unsung heroes. They build these incredibly complex machines that then craft the chips powering our entire digital world. I mean, everything from your phone to the massive data centers driving AI. We've really dug into their latest investor call, poured over their presentation slides, watched a recent video interview, and of course, crunched the numbers from their financial statements. This is all for their second quarter 2025 results. So our mission for you today is to go beyond just the raw numbers. We want to pull out the most important insights, understand what's really driving their business, and critically, what it all means for the future of technology, especially with this, well, exponential rise of artificial intelligence. The big question we're tackling is, how is this absolutely critical company navigating the, frankly, insatiable demands of AI? And what does their latest quarter tell us about the future of tech, the chips in your pocket?
Especially when they're facing these growing global complexities.
Yeah, what's fascinating here is ASML's truly unique position. I mean, they're absolutely critical in the global tech ecosystem. They're not just, a supplier. They are fundamentally at the heart of innovation in semiconductors. So understanding their performance, their strategy, it gives us this crucial, almost unparalleled window into the broader tech landscape and, well, where it's all headed. It really helps answer that central question you just posed.
All right, let's get into it then. ASML's Q2 2025 report card.
Yeah.
These numbers, as you mentioned, came in at the upper end of guidance. What were the headline figures that really jumped out at you? What story are they telling?
Well, the headline numbers are certainly solid, no doubt. Total net sales hit $7.7 billion. Net system sales were $5.6 billion. And within that, their advanced EUV machines, extreme ultraviolet, brought in $2.7 billion, and non-EUV systems, $2.9 billion. Logic chip manufacturing, that dominated system sales at 69%, with memory making up the other 31%.
And what about their service business, installed base management?
Right, their IBM installed base management, not the other IBM.
Right.
Those sales actually came in above guidance at $2.1 billion, which is, a fantastic sign of that recurring revenue from servicing all those machines already out in the field.
Okay.
Gross margin was strong too, 53.7%, again above guidance. Net income stood at $2.3 billion, which translates to earnings per share of 5.99 dealer. And looking at new orders, net system bookings were healthy. $5.5 billion, even more heavily weighted towards logic this time at 84%. And they ended the quarter with a really substantial backlog, around $33 billion. That gives great visibility into future revenue.
Those are impressive figures, definitely. But what really drove this? Was it just high demand across the board, or were there some specific strategic things happening, maybe some one-offs?
It was a really interesting mix of factors, actually. A significant element was the revenue recognition from one high NA system, high numerical aperture.
Just one.
Just one. But these are ASML's most advanced, most expensive machines. They're designed for pushing chip density even further. So yeah, one sale can really move the needle. We also saw a strong increase in upgrade business within their IBM segment. That shows the enduring value of their equipment, people wanting the latest capabilities on existing platforms.
Existing.
And then, there were some positive sort of one-off items that helped lower costs. And interestingly, the impact from tariffs was actually less than they initially anticipated. That certainly helped the bottom line.
Okay, so some favorable wins there.
But here's a key insight, I think. Even with all these positives, that single high-NA systems revenue recognition, it had a slightly dilutive effect on the gross margin.
Oh, interesting. So selling the most advanced stuff actually lowered the percentage margin.
Initially, yes. It really highlights the complex financial dynamics when you're bringing such pioneering, high-cost technology to market first. The takeaway here, I think, is that ASML is strategically comfortable trading some immediate margin percentage for that long-term competitive advantage. They're the sole supplier of this indispensable future tech, and this solidifies their market position for years to come.
That's fascinating about the dilutive effect. It really shows the long game they're playing. So how do they manage communicating that complexity to investors who might just look at the margin percentage?
Well, they focus heavily on the technology roadmap, on market leadership. They emphasize that these are necessary investments for sustained future profitability and, frankly, dominance. It's about explaining why the margin is temporarily affected and what the long-term payoff is.
Right, setting expectations. So it's a blend of strategic sales, ongoing service revenue, and those favorable external factors helping out. Now, we've covered the numbers, the drivers. But let's talk AI.
Hmm?
What's the most surprising thing you took away regarding how AI is fundamentally reshaping ASML's business across both logic and memory?
You know, the most surprising thing isn't just the sheer volume of demand AI is creating, though that's huge. It's how fundamentally it's dictating which ASML machines become the most critical. It's pushing chip makers deeper into EUV and forcing that transition to next-generation memory much faster than perhaps anyone anticipated even a year or two ago.
So it's accelerating their roadmap adoption.
Exactly. ASML makes it absolutely clear AI is the primary catalyst for growth right now, period.
Well,
Across both logic and memory sectors. For logic, they expect system revenue to actually increase in 2025 compared to 2024. Why? Because customers are rapidly scaling up capacity on those leading-edge nodes specifically to meet this surging AI demand. And it's not just logic. Memory revenue is also projected to stay strong. Customers are transitioning to next-gen high-bandwidth memory HBM and DDR5 products. Both of those are absolutely critical for advanced AI applications. They need that speed, that bandwidth to handle the massive data flows. It's a key bottleneck otherwise.
right.
They also mentioned their China business projected to be over 25% of total revenue this year, though they expect that to moderate later, kind of reflecting its proportion of the overall backlog.
Wow. That really drives home how AI isn't just, some software trend. It's a tangible force driving massive investment in the bedrock technology.
So if we connect this directly to ASML's core, the EUV lithography, what does this AI demand mean for those machines specifically?
It means EUV is playing an increasingly crucial role. It's becoming non-negotiable. For example, DRAM customers and memory makers are now specifically talking about increasing the number of EUV layers they use on their latest chips, and even future ones.
More layers means more complexity, more EUV steps. Precisely. It's not just about making more chips, it means more intricate designs. And critically, that means higher demand for ASML's most advanced tools to actually create those complex structures. Customers are looking to add about 30% more EUV capacity in 2025 compared to 2024. That's a big jump.
Huge.
And the fascinating part is how ASML is meeting this demand. Their NXE 0.3800E system, that's their advanced low-NA EUV tool for high-volume manufacturing it, offers significantly higher productivity.
Oh, so it's not just about selling more machines.
Not entirely. This higher productivity means they can address that 30% capacity increase with approximately the same number of systems as last year.
Okay.
But crucially, at a higher average selling price per system and with improved gross margin per system, it's a story of efficiency, of advanced capability, not just brute force volume.
That's smart. Get more value out of each unit.
Exactly. And this combination, increased capacity needs met by more efficient systems, is expected to lead to overall EUV revenue growth of around 30% in 2025 versus 2024. Meanwhile, DUV deep ultraviolet, the older tech but still vital, and their metrology inspection systems revenue is expected to be pretty similar to 2024. But IBM, the service and upgrades, that's projected to grow by more than 20%, driven by services and those crucial upgrades.
It really is like upgrading from a regular highway to a hyperloop for chip production, isn't it? Getting more throughput, more efficiency, sounds like a very strategic move.
Absolutely. It's about maximizing the output and value from each very expensive, very complex system they sell.
So that brings us neatly to the actual tech breakthroughs enabling this.
Yeah.
How is ASML pushing the frontier? Talk us through the progress on low-NA and high-NA EUV.
Right. This really showcases their comprehensive EUV portfolio. It's designed to give customers flexibility, let them meet these incredibly advanced roadmap goals, but also, crucially, optimize their cost of technology. Let's break it down. First, low NA EUV, specifically that NXE 0.3800UE system we just mentioned. They made strong progress this quarter, completed a large number of field upgrades to get those machines running at the final 220 wafers per hour spec, WPH.
220 WPH. And that's up from.
It's a massive 37% productivity boost compared to the previous NXE 0.3600E system. And importantly, all new NXE 0.3800E systems are now shipping at that full specification right out of the box.
What's the bottom line for the chip makers then?
Huge benefit. This higher productivity lets them replace more complex multi-patterning DUV steps, which are costly and time-consuming with single EUV exposures. That directly translates to lower costs, much faster cycle times, and better yields. It's a massive competitive advantage for chip makers using these tools.
Okay, that's low NA. What about the next frontier, high NA, the EXE systems?
Moving to high NA EUV, yes. That's the EXE 0.5000 and the newer EXE 0.5200B. ASML is continuing to mature this really pioneering technology. They're using the EXE 0.5000 with their R&D customers. ironing out the kinks. But a major milestone this quarter, they shipped and started installing the first EXE.520B system.
Ah, the 5200B. Why is that specific model significant?
Because this is the system explicitly designed to support high-NA technology insertion into high-volume manufacturing environments. It's moving from the lab to the factory floor, basically. The EXE.520B is capable of achieving at least 175 WPH. Now, that's lower than the low-NA machine, but it's roughly a 60% productivity improvement compared to the earlier EXE.5000 high-NA development tool.
Still a big step up for high NA.
Absolutely. And the long-term vision for high-NA is to further lower the cost of technology by enabling a shift. Instead of doing multiple complex patterns with low-NA EUV, you could potentially do it with a single exposure using high-NA EUV, streamlining the whole process again.
Makes sense. Fewer steps, less complexity. And what about DUV? Is it just standing still while EUV takes over?
Not at all. Even with all these EUV advancements, their DUV systems are still critical and still evolving. As customers move to more advanced nodes, even the layers not using EUV require more sophisticated DUV systems. So this is driving adoption of their latest generation immersion tools, the NXT.2100 and NXT.2150, and also their latest KRF system, the NXT.870. DUV is still very much part of the equation.
It certainly feels like a relentless pace of innovation. But what are the hidden costs, or maybe the biggest pressures ASML faces in keeping this up? Is there a point where it just becomes unsustainable? The R&D must be astronomical?
That's a great question. The pressures are immense. You hit it, R&D costs are absolutely astronomical. There's also the constant fierce competition for attracting and retaining the world's absolute top engineering talent. You need the best minds for this. And then there's the sheer challenge of scaling up production of these incredibly complex machines without any compromise on quality or reliability.
Right.
So while it feels relentless, ASML's unique, almost monopolistic position in EUV and the critical demand from customers, it makes it a sustainable race, for now. But it's incredibly demanding, no question.
Okay, that continuous cycle is incredible. But let's look ahead now. How does ASML translate these advancements and this demand into their actual forecasts? What are they expecting for the rest of 2025 and beyond, especially with those external pressures we've hinted at?
Right, the outlook. For the full year 2025, ASML expects total net sales to increase by around 15% compared to 2024, and they're guiding for a gross margin around 52%. Demand is expected to be more skewed towards the second half of the year, especially Q4. That's pretty common in this industry, sort of a year-end push.
Okay, and for Q3 specifically?
For the upcoming third quarter, Q3 2025, they're guiding for total net sales between $7.4 billion and $7.9 billion, and a gross margin between 50% and 52%.
50 to 52%. That's potentially lower than the first half average. Why the dip in expected margin for the second half?
Yeah, that's an important point they highlighted. The expected lower gross margin in the second half compared to the first half is primarily due to a few things. First, that dilutive effect we talked about, they expect to recognize revenue from a greater number of those high-cost, cutting-edge, high-NA systems in the second half. Second, they expect lower revenue from upgrades, as many of those NXE.3800E upgrades we discussed will be completed by then.
Ah, okay.
And third, the absence of some of those one-off positive cost items that helped out in the first half. So it's a combination of mix shift and timing.
Got it. So if we look further ahead now to 2026, the picture, as you kind of hinted, becomes a bit more nuanced. They're preparing for growth, but there's a definite pause in confirming it. What's causing that hesitation?
Yeah. Indeed. Looking at 2026, they still see strong demand signals, driven by AI for both logic and memory. And they see a positive impact from chip makers using a growing number of EUV layers, which obviously requires more of their machines. That all aligns with their tech roadmap. However, they are also facing increasing uncertainties. And these are driven primarily by macroeconomic and geopolitical development.
Headwinds we mentioned.
Exactly. This includes potential direct and indirect impacts from things like tariffs, export controls, other factors, things that might affect customer decisions on when to spend their capital. Timing is key here. So because of this backdrop, while they are actively preparing for growth in 2026, building capacity, planning resources, they stated they cannot confirm it at this stage.
Wow.
It really highlights the delicate balance for even a global leader like ASML in such a volatile world. They see the demand, but the external environment adds significant risk.
Can you give an example of those tariff impacts? How might that play out?
Well, they mentioned direct impacts could come from system sales to the U.S. or from importing materials for their U.S. facilities or even exporting parts from the U.S. It cuts multiple ways. And the indirect impacts are even harder to pin down. Potential effects on global GDP, overall market demand slowing down. Those are much fuzzier. ASML is actively working to mitigate these impacts, but it remains a key area of uncertainty they have to manage.
Those geopolitical crosscurrents sound like a serious headache. It's almost like ASML needs a team of, I don't know, futurists and political scientists alongside their engineers just to plan effectively these days.
Ah, in a way, yes. Strategic foresight, understanding global trade flows, political risk, it's become just as crucial as the pure engineering prowess. They're not just selling incredibly complex machines, they're navigating this incredibly complex global chess game.
Right. Yet, despite these short-term uncertainties, these geopolitical issues, their long-term vision seems unchanged, pushing out to 2030. What's the narrative there? Still bullish.
Absolutely. Looking out to 2030, ASML remains consistent with what they presented at their Capital Markets Day. They anticipate the semiconductor market staying robust. AI continues to be the primary growth driver in their view, leading to a product mix shift towards the most advanced logic and DRAM chips.
Which, of course, need their most advanced machines.
Precisely. This will inherently require a more intensive use of advanced lithography systems that's supported by their productivity roadmap on low NA EUV, and critically, the introduction and ramp up of high NA. So they still see that 2030 revenue opportunity between 44 billion and 60 billion, and they expect gross margins by then to settle somewhere between 56% and 60%.
So a really compelling long-term story, but one that, yeah, very clearly acknowledges these significant external pressures. It really underscores the complexity of just operating at that level today. Okay, let's quickly touch on shareholders before we wrap up. How does this performance and this outlook translate back to them? How are they returning value?
Yeah, ASML continues to show a strong commitment to returning significant cash to shareholders. It's a key part of their story. In Q2 2025, they paid out a final dividend of 1.84 per ordinary share. That brought the total dividend for the year 2024 to 6.40 per share. The first quarterly interim dividend for 2025 will be 1.60 per share, payable quite soon, August 6th, 2025.
Buybacks.
Buyback too. They purchased approximately 1.4 billion worth of their own shares in Q2. That's part of their ongoing 2022-2025 share buyback program. By the end of Q2 2025, they'd bought back a total of 5.8 billion under that program. So significant returns through both dividends and buybacks.
That's definitely a strong commitment. But does this aggressive return policy ever create tension with their need for that massive long-term R&D investment, especially when, as you said, they're bringing these super high-cost, initially margin-dilutive systems like high-NA to market? How do they balance that?
Yeah, it's a constant balancing act for sure. But they manage it through, well, very strong cash flow generation. And by leveraging their dominant market position, this allows them to fund both the immense R&D and the shareholder returns. Ultimately, the long-term R&D is seen as absolutely foundational to future shareholder value. So it's not really seen as a conflict internally, but rather two sides of the same coin driving future growth and returns. You need the R&D to have the future returns.
Okay, that makes sense. Which leads me to, I guess, the big summary question. How does a company like ASML, so central to technology's future, clearly benefiting from this massive AI wave? How do they balance that incredible internal momentum, that relentless innovation, with these increasing external macroeconomic and geopolitical headwinds? It seems like a monumental challenge.
It truly is monumental. You have this clear path laid out. Technologically speaking, $1 trillion semiconductor industry by 2030, powered largely by AI. The demand is there, the capability is being built, but the journey itself is becoming so much more complex. It requires incredible resilience, very strong strategic partnerships, and yeah, almost a prescient understanding of global dynamics, anticipating shifts before they happen.
Right. Okay. So let's leave our listeners with something to think about. Our provocative thought for you today. As AI continues this incredibly rapid ascent, what unexpected ripple effects might these increasing uncertainties I have? The geopolitics, the tariffs, the economic shifts, what effect might they have on the speed and perhaps even the accessibility of the very technologies we're all coming to rely on? Will these geopolitical shifts actually slow down technological progress overall? Or will they simply reroute it? Maybe creating new unexpected centers of innovation, fostering different kinds of collaborations, or perhaps widening the gap between those who have access and those who don't. Something to ponder next time you look at the incredibly complex chip powering your device.